The more money that gets printed, if we don't make more stuff, the price of everything goes up. It's exactly why my friend Robert Kiyosaki says, cash is trash. Cash is trash. What matters the most of all the metrics? You do. You matter the most. Because what happens next in your life, in your business, is almost, not completely, almost independent of what happens in the economy. We want to pay attention. We want to follow the cement, follow the dollars. If all you did was watch Brian's presentation a couple more times, not just for the markets he chose, but for the why behind all those lists, you start to get some clues. But a lot of it's going to have to do with you. So in order to do this, I'm going to suggest you do something called a SWOT analysis. Who knows what a SWOT analysis is? Okay, if you don't know, it's pretty simple. SWOT is strengths, weaknesses, opportunities, and threats. Strengths, weaknesses, opportunities, and threats. In my mind, two of those are external and two are internal. Let's talk about the first two, strengths and weaknesses. This is you. This has nothing to do necessarily with the outside world. You have to, as Jim Collins says in his great book, Good to Great, you have to confront the brutal facts. You're good at some things, and you're not good at some other things. You're an integrator, or you're a visionary, or you're a spreadsheet person, or you're a people person. Here's what you have to do. Be clear on who you are and why. So your strengths, what is your company good at? My friend Kyle Wilson will call this your secret sauce. Liz shared yesterday morning about your core genius. So be honest. It's not politically correct to pat yourself on the back, but you have my permission to do that when doing your SWOT analysis. Be clear. Here's what we're good at. Michael was very candid. Of the three things involved in syndication, finding deals, finding money, and operations, he says we're good at all of it, but operations is our weakest part. Not that they're bad at that, but that's the part they're focusing on increasing. What's that for you? What are you strong at? What are you good at? What are you missing? And then weaknesses, you have to be even more brutal. Like if you suck at stuff, be honest about it. Be honest about it. And then use the ideas Chris shared on how to find maybe a partner or another team member that has those complementary skills. I try to be sure that I can only do a very few things well so that people don't ask me to do much else. All right, so those are you. That's going to be up to you and your business. Let's spend some time talking about the market opportunities and threats, because there's a bunch. So opportunity-wise, opportunities, first of all, are for optimists. So develop an optimistic attitude. Dugan was sharing that today. It was awesome. Optimists get all the opportunities. If that weren't true, we'd call them pesitunities. So let's take a look at what some of the current opportunities that exist in the world today are. First of all, rents are increasing. Have you noticed? Rents are up. That's good, right? That's good. Now, we learned today that rents are not up equally everywhere. That's also good. It's one of the greatest things about real estate. You vote with your money where you go. And money goes to where it's loved and appreciated. Rents are increasing. That's a good thing. There's a housing shortage. Depending on who you listen to, I heard 5 million yesterday. I have a friend who really studies this stuff. She was in the Federal Reserve here in Dallas for 9 years. Her name is Danielle DiMartino Booth. Who knows who Danielle is? If you don't get her book, it'll freak you out, but it's amazing. It's called Fed Up, Why the Federal Reserve is Bad for America, an insider's take. Anyway, super smart. She's one of the few market analysts that studies the real estate market. Not from the way we do, but it's really good stuff. She believes the housing shortage is not as big as 5 or 4 or 3 million, but she says it's a solid million. Either way, she's maybe the most pessimistic at it, but she believes there's a housing shortage coming. We need more houses. Many of them are falling into disrepair, and whatever is creating the population continues to happen, so we need more houses. What else? Interest rates are low. Not as low as they were last week, but they're low, right? Interest rates, I mean, for the price of capital, we are living in the heyday of being able to borrow. So if you don't believe that, talk to your dad or your mom, right? They're going to say, oh, interest rates are great. So low interest rates, that's good. Investors are less trusting of Wall Street. Do you agree? We used to trust Wall Street, not anymore. They've been exposed as a bunch of thieves who run casinos. If you don't want to bother to get educated, then put your money in a mutual fund and good luck with that. You guys do so much better than that, partially because you care more, but also because you don't necessarily get paid on the churn, you get paid on the activity, which is a good thing. But because investors are less trusting of Wall Street, that's great news for you. Our whole mission at the Real Estate Guys is helping getting money out of Wall Street and into Main Street, where good, competent operators like yourself put that money to work and watch it carefully. What else? Real estate's a proven investment vehicle. Of all the things you could invest in, real estate's the best. It's the single best. I'll have that conversation with anybody anytime. There's other things to invest in. We'll touch on a couple of them, but primarily real estate just rocks for so many reasons. And I don't know, I originate from Silicon Valley, and there's a lot of technology there, and it's making our lives better in some ways. And I don't think there's ever going to be a technology that eliminates the need for human beings to sleep under a roof. This is a product that people need. Follow me on this. Every single dollar that you put into stocks, bonds, oil, gas, cryptocurrency, every single dollar you invest in those things is 100% discretionary. Do you have to buy any Bitcoin? Nope. Do you ever have to invest in equities in the stock market? Nope. Do you have to invest in oil and gas? No. You don't ever have to. It's discretionary. Not true for real estate. You cannot sit out the real estate market economically. Maybe you're not going to own real estate, but you're going to interact economically with real estate. We call those people tenants. You can't sit out. Even people that live under a bridge are interacting with real estate. You can't sit out the market. It's proven. That's good news. Tenant-landlord law. Tenant-landlord law varies greatly, but the good news is you can decide where to buy. How many of you consider the tenant-landlord law before you pick a location? Every hand should be up. Absolutely. I met a guy many years ago at a real estate event, and it was a pivotal moment for me because we just happened to, at the time, own the same number of doors many, many years ago, more than 20 years ago. And what's the likelihood that we would own the same number of doors? We get to talking, there's one difference. Every one of my doors was in California. That's where I live, that's where I love, that's where the place, the weather's great, it's fabulous, and I wish they could all be California girls. None of his property, even though we lived in California, not a single door of his was in California. What an awesome conversation. So first of all, who had more top-line real estate? But he got me thinking. And that's what led to the quote many of you know me for, which is live where you want to live and invest where the numbers make sense. Maybe you live in a market that's awesome, but if you don't, you can go where your money is appreciated. Tenant and landlord law is different everywhere. And you can choose. It's great news. And then there are tax incentives. You're going to hear from CPA Tim Gertz in just a little bit. And tax is an awesome element of real estate investing. Now, he gets a little more excited about tax than I do. But the good news is, if you're new to this, I know I saw a lot of hands yesterday morning, a lot of people are new. Real estate investors, we don't pay a lot of tax. And that's legally. And Tim's going to cover some of that, but also I think some of the changes and so on. But there are tax incentives in real estate. So I think those are all opportunities. Now, there are some threats. Oh, there's another big one. You're here. Like, duh. It's a huge opportunity. How many of you have already met somebody really super cool? Look at that. Awesome. That's going to continue. We still got a few hours left. Let's talk about the threats, because there are some, and they are real. The first one's the big one, the one that everybody's talking about, of course, is inflation. Inflation. So your buildings are up in value and your rents are up. Inflation sucks. If you're on the right side of inflation, it's not a problem. Here's the problem. It's your tenants. It's your tenants. Their wages are not going up as fast as the market would have you believe. So this could be a challenge for you. Not only that, if you're building, if you're developing, if you've got a lot of CapEx budget coming up, then this is going to be a concern for you. Supply chain and pricing are in trouble, right? Who personally has had an issue with supply chain or with the pricing of your components? Yeah, pretty much everyone doing anything. Okay. What else? Higher interest rates. They're good. They're not going to go crazy. We learned yesterday, but still they are going up. And does that affect your cash flow? Yes, it does. And does it affect your cash flow when you pay more for the building? Yes, those two things are true out of the article. It does. Just be aware. There are some answers. We'll talk about them. Tax increases. Tax increases. Now, that's not alarming because as real estate investors and as entrepreneurs, we figure out how to work the tax law to our advantage. That's exactly what Tim spends all his time doing. So the good news is there's ways to pay as little tax as legally possible, But the bad news is we got to think more about this stuff because the current administration, at least here in the United States, is in favor of more taxes. It's not right or wrong. I'm not political. It is what it is. All right, what else? Cap rate compression. Everyone know? Well, does everyone know? Who doesn't know what I mean by cap rate compression? It's okay if you don't know. Okay, some of you are new. Most of you are like, I don't want to hear about it again. Here's the idea. When you buy an apartment building, you buy and pay for and receive two things. Two things. When I buy an apartment building, an income-producing property, I pay for two things. What are they? The income and the property. When I buy income property, I get the income and I get the property. Now, if I'm buying a performing asset, sure, I could get to perform better, and I'm going to. That's part of my plan. But if it's performing, it already has cash flow. What cap rate compression, cap rate is a capitalization rate, the return on your money. When the price gets bid up for the same amount of income, the percentage return goes down. That's how it is. So when we're in a super crazy competitive market like we've been in the apartment space for the last many years, cap rates get compressed. So far now that in many markets they don't make any sense. You have your little box, you walk if you can't get stuff to fit in there. And you should. You shouldn't just overpay. Many years ago I was at a land auction in Nevada. BLM, the Bureau of Land Management, does these auctions a couple times a year. And I was in the development business, did a lot of projects in Las Vegas, and it was the first time at the BLM auction. Now, to get into the auction, to be bidding, you have to prove liquidity, and you have to prove you can close within 30 days on a property. So it's not just a big free-for-all. It's a room about a third of the size of this. Well, as you walk in, they've got a whole book on basically every property they're going to auction off. They've made this available ahead of time so you can do your research. So my partner and I have only 2 parcels of the 60-something that we're actually interested in. We get talking to another guy. We've been in the market before we had been anywhere near to be in a position to do anything. And good guy, home builder, been building homes there for 40 years. And he goes, well, what are you guys looking at? And I go, well, we're looking at this. And he goes, yeah, me too. Good sign. And we're looking at this. And he goes, interesting. Not the answer I was looking for. Anyway, fast forward, the first property comes up, and we have set, my partner and I, the maximum that we're going to pay ahead of time. Is that a smart practice? Yep, absolutely. This is as much as we're going to pay. We get in there, and the bidding starts, and we make our bid, and the bidding, and we make another bid, and it goes over our price. And my partner makes another bid. I'm like, no, no, no. Stop. We said, remember? Right? But he got caught up, and we didn't get the property. I guess that's a good thing. Finally, the next property that we were going to bid on shows up, and I said, do not bid first. There was not a single bid on that property, not one in a room of 60 developers in Las Vegas. Somebody knew more than we did, which is always the case. So cap rate compression means it's going to be harder to find great deals, which is why teamwork matters even more. And then insurance and reinsurance, that's a longer topic than we have time for, but that could be an issue. So don't just take for granted that you could easily get your insurance. And then here's a big one, finding a replacement property. A lot of you are like, we could sell now and look at the return. But then what do you do to the money? Go into a lesser market or a lesser, you can figure it out, but it is a bit of a threat. So those are some of your threats. And then I think the biggest threat is global political instability. This is a crazy time. There's a lot going on in the world. I don't know if the zombie apocalypse is coming, but something's coming, and there's a lot of it. So just pay attention. Before I get into some strategies, let's cover some other things that are happening. Inflation and supply chain. This is what's happened to consumer prices since 1950. Can anyone spot the trend there? Okay, prices are up and up and up and up. Now, many of you have heard that we've set record-setting inflation. That's true. Here's what inflation looks like, and this is in January when we hit 7.5. We've hit higher than that, but it's a long time since inflation has been this high. Now, again, good and bad. The good side is look at asking rents in the various areas of real estate. Asking rents are up in 2021, at the end of 2021, a lot, starting to dip a little bit in apartments, but rents are up. That's a good thing. This is not a good thing. This is historical trend in construction materials. What the average index is, the black bars, and then the green in Dealmaker Live Green is the percentage increase. Ow. So we construct a lot of property. I'm in the development business, and we buy a lot of materials. And like you, those of you in development, this has been the bane of our existence for the last couple of years. And I don't think it's over. My friend Dr. Chris Martenson says we ain't seen nothing yet in terms of log jams and supply chain and the ability to get stuff that we need. So just be forewarned. At the same time, what's happening is the purchase power of the US dollar has a trend too. It's a little harder to see here. Can you see the trend? For the last 100 years, the purchasing power of the dollar has trended in a particular direction. Let me put it in a way you'll understand. This was the cost of a cup of coffee in these various years. The last one I have is 2015 because you know what you paid this morning. The reason for that isn't because coffee's gotten so much better. The reason is because we print money, and lots of it. The reason your buildings are up in value, the reason that your tenants didn't have to go to work for 6 months is because we just print. And you can see we have more money printing than ever. Now, I know some of you, your eyes start to glaze over when people start talking about the Federal Reserve and the printing of money. So I'm going to make it really easy for you to understand. The more money that gets printed, if we don't make more stuff, the price of everything goes up. It's exactly why my friend Robert Kiyosaki says, cash is trash. Cash is trash. Now you're going, wait a minute, aren't I in this business for cash? Well, no, you're not. You're in this business for assets that create cash flow. Very different proposition because price is not the same as value.